The stock market just surged after a surprise move from the Trump administration. But is this really good news? Or the calm before the storm? President Trump has just announced a 90-day pause on most new tariffs, sending shockwaves through global markets. But here's the twist: tariffs on Chinese imports are still going up to 125%. Today we're breaking down what this really means for the economy, for investors, and for the future of global trade. Welcome back to The Alternative Investor, where we dive deep into the macro shifts that move markets and help you profit from what's next. Like this video, subscribe, and turn on notifications to stay ahead of the game. And don't forget to claim your free Robinhood stock, links in the description below. President Trump announced a sweeping 90-day suspension on most new tariffs, a move that caught both Wall Street and Washington by surprise. The pause is designed to open the door for bilateral trade negotiations, offering a temporary relief window for importers and trading partners. But here's the kicker: this is not a rollback. A universal 10% import tariff remains in place, and that's still a major cost for American businesses and consumers. This isn't a surrender, it's a strategic pause, and the message is clear: America's new trade posture is not going anywhere. While most nations caught a 90-day break, China did not. The Trump administration raised tariffs on Chinese imports to 125%, citing ongoing issues with intellectual property theft, trade imbalances, and state-sponsored industrial policy. This signals a clear stance. The U.S. is looking to decouple strategically from China in key industries like tech, semiconductors, energy, and EVs. For investors, the initial reaction? Stocks rallied, big time. Investors were relieved that the tariff war didn't escalate across the board. But the euphoria is giving way to concern. Higher Chinese tariffs mean higher prices for imported goods. Inflation pressure could return, putting the Fed in a tough spot. Some analysts are warning this could lead to stagflation, slowing growth and rising prices. According to Barron's and Vanguard's latest reports, this delicate balance could tip the economy toward a mild recession by early 2026 if global trade flows don't stabilize. This isn't just a U.S. story. The global trade order is reshaping in real time. Mexico and Brazil are negotiating new trade agreements to limit their exposure to U.S. tariffs. The European Union has proposed a bold zero-for-zero industrial tariff agreement, essentially eliminating tariffs on key goods to maintain open markets. This could be the start of a multipolar trade world, where regional blocs, rather than global systems, determine the future of commerce. If you're watching this channel, here's what you need to focus on. Domestic producers, such as those in steel, aluminum, and manufacturing, stand to gain. US-based energy, infrastructure, and defense sectors also benefit. Additionally, small-cap companies with little international exposure are likely to see positive outcomes. Import-heavy retailers and tech hardware companies are among the losers. Firms that rely on Chinese raw materials and manufacturing will face challenges. Emerging markets that depend on U.S. trade flows are also at risk. This is not the time to be passive. The new trade landscape is here, and your portfolio needs to adapt to it. One of the biggest questions swirling around this tariff pause is, does it help or hurt the economy in the long run? On the surface, a 90-day pause looks like good news. It eases pressure on businesses and consumer prices, which could give the economy room to breathe. But when you zoom out, there are three key recession risks to watch. Tariffs on China are still rising, and those higher import costs will feed into inflation. Businesses remain cautious. Even with a pause, many are still sitting on cash and holding back on capital investments. The Fed is stuck. If inflation ticks back up due to tariff-driven price increases, the central bank may have to keep rates higher for longer. Economists are split. The bottom line? Trump's 90-day pause might look like a diplomatic olive branch, but the real message is economic aggression with precision targeting. The tariff war didn't end, it just entered a new phase. Drop your thoughts in the comments. Do you think Trump's strategy will work, or are we heading toward a bigger global showdown? Like this video if you appreciate real-time macro breakdowns. Subscribe to The Alternative Investor and turn on those notifications so you're never caught off guard by the next market shock. And remember, grab your free Robinhood stock in the description below. This is Robert signing off from The Alternative Investor. Stay sharp, stay focused, and stay